Hello, Pathfinder community. My name is Alex Greer. I'm an Associate Wealth Advisor in our Cary office. It's Wednesday, March 12th, and with the recent pullback and overall volatility in the market, I wanted to reach out with some quick updates and our thoughts on what's been going on. Monday, March 10th, was a big pullback day in the markets. The S&P 500 was down 2.7%, the Dow was down 2.1%, and the Nasdaq was down 4%. This recent pullback and the overall volatility we've been experiencing has been due to a number of uncertainties that investors are facing. Inflation has remained stickier than many analysts predicted. Wage growth, services, and housing costs in particular have all remained at elevated levels. Tariffs have also been in the news recently. The Trump administration has levied a number of tariffs on our trade partners, and our trade partners have started retaliating, sparking concerns of an ongoing trade war. These tariffs, which were intended to protect U.S. industries, could backfire and raise costs for both businesses and consumers. The biggest pullbacks that we've seen so far year to date have been in the tech sector, consumer discretionary, and communication services. These sectors have outperformed in previous years and have been giving back some of those gains. The Magnificent Seven, with companies like Nvidia, Tesla, and Amazon, have faced the brunt of the sell-off and have also been giving up previous gains so far year to date. While we have seen a pullback in those sectors, it's important to remember that other sectors have performed well. Notably, international stocks and U.S. bonds have actually performed strongly year to date. This is a great example of why we believe in diversified portfolios. We don't chase returns concentrating and picking stocks in one sector or just owning a handful of stocks. We want to make sure we have broad exposure to all different sectors of the market. It's also important to remember that market pullbacks like this are normal. The average intra-year decline in the S&P 500 is around 14%. As of close on Tuesday, March 11th, the current pullback off of the recent high from mid-February in the S&P 500 is just over 9%. So while many of the things that we've seen in the news may feel unprecedented, it's important to remember that pullbacks like this actually happen almost every year in the market on average. We do expect volatility to continue, and when volatility occurs, timing the market isn't the answer. 50% of the S&P 500's best days have actually occurred in bear markets. And if you look at the S&P 500 from 1995 to 2024, if an investor missed the 10 best days over that time period, their overall returns would be reduced by 54%. Our recommendation is to continue aligning your portfolio risk levels to long-term goals and then riding out the volatility in the markets. As always, if you have any specific questions on your portfolio or your long-term financial plan, please reach out to your wealth advisor. Thank you so much for listening. Make it a great day.